Is the stock market just a giant casino where fortunes are made and lost in the blink of an eye, where bubbles grow and crash, leaving devastation behind? Let me take you back to the 1630s, to the Netherlands, a land of windmills, canals, and tulips. Tulips were a new and exotic flower. Their colorful petals made them highly desirable. Owning red tulip bulbs became a symbol of wealth and status. People started paying crazy prices. For example, a single rare tulip bulb called the Semper Augustus once sold for as much as 6,000 guilders, that is roughly 750k dollars in today's money. To give you an idea, that was more than price of a comfortable house at the time. A skilled worker earned only about 300 guilders in a year. So imagine paying over 30 years of salary for a flower bulb. Everyone wanted to get in. Farmers, merchants, even craftsmen and nobles all bought tulip bulbs, hoping to resell them for a bigger profit. The prices kept climbing, sometimes doubling or tripling within days. People even traded land, houses, and ships for bulbs. This frenzy was like a game that promised fast riches. But underneath this bubble was a dangerous truth. The value of a tulip bulb was not in the flower or its use. It was purely based on how much the next buyer was willing to pay. There was no real fundamental value. This caught many by surprise. No one carefully considered what would happen when the excitement faded. Then, suddenly in February 1637, the market collapsed. Prices down from thousands of guilders to just a few hundred in days. A bulb worth 5,000 guilders on Monday could barely sell for 50 by Friday. People rushed to sell their bulbs, but there were no buyers left. Many lost fortunes overnight, some even bankrupt. This was world's first recorded speculative bubble, a massive gamble where many bet on price increases rather than the true value of anything. Tulip Mania became a warning story, teaching us about the dangers of greed and speculation. This story explains why many today see the stock market as a gamble, full of wild ups and crushing downs. When we hear about crashes, losses, or get rich quick stories, it's easy to believe investing is like rolling dice or playing slot machines. But here is the truth. Investing, as its core, is not gambling. Investing means owning a part of a real business, something that creates values and grows. It's about research, patience, and strategy, not luck. The casino drains your wealth the longer you play. The stock market builds your wealth the longer you stay. Let's look at a completely different story, one of long term success and smart investing. Warren Buffett, one of the richest men in the world, started with ordinary money. Unlike speculators, he chooses companies that have strong business, good management, and long term growth potential. In 1964, Berkshire Hathaway stock cost just $19 per share. Today, that same share trades for more than 500k dollars. If you had invested $1,000 back then, you would be sitting on more than $27 million today. Buffett doesn't gamble on quick wins. Instead, he buys shares and holds them for decades, allowing his money to compound. Compounding means reinvesting your profits so your money grows on top of money you already earned, like a snowball rolling down a hill. Thanks to his approach, Berkshire Hathaway grew from a small textile company into a giant worth hundreds of billions. His story proves that investing wisely and patiently can build real, lasting wealth over time. Everyone can invest, but not everyone will succeed. Some lose money, some make it, but the difference is how you approach investing. In the next video, I will teach you how to start investing smartly, from picking the right strategies to understanding how much money you need. We will cover why falling markets are not the end of the world, how to handle fear and greed, and how to make the most of your money with compounding and smart tax strategies. Tell me, how old are you? Because no matter your age, now is always the right time to start. Everyone talks about compounding because it really works, but there is more to it than people say. And yes, while taxes take a slice of your profits, there are ways to minimize that slice legally, so your money grows faster. Remember, investing beats almost any other way to grow wealth. but only if you do it right. So stay tuned. Your journey to smart investing begins now.